Hi there, Serial Trader here. Just want to present a nice setup here on XLV, and that's the healthcare ETF. Now this is actually shaping up the way I wish the overall market looked, referring to SPX or other major indices. And okay, so running on the assumption here that we had this significant, major wave 3 high, and that was in October of 2018. And on XLV that came in at 96.06, and we made slightly under that, so basically a double top here in December of 2018. But I just basically want to say, major wave 3 in place. We had this A, B, C down, and that was into a large degree wave 4 low, and that low came in at 80.61. And since the December low, so you see we went down a lot in December here on XLV. Basically, the entire down move from this double top took place in December. So from that area, we have a nice 1, 2, 3, 4, 5 up. And that's for what I would label as an initial wave 1 peak. And that happened on March 4th. And that came in at 93.45. Now, since then, despite the overall market just marching higher and higher and higher without any real pullback or retracement, healthcare has done its own setup here, and we have a nice A down and then a triangle B. And I've labeled the subwaves of the B wave because it is such a nice triangle, A, B, C, D, E for B. And now we've had a nice thrust down out of the triangle for this C wave of a larger wave 2. And you can see we retraced, so the overall retracement of the move from the December low to the March high. In between the 618 and the 786, we dove into that range, and now it looks like we're reacting quite strongly off of there, potentially with our pivot in place and moving higher now in this wave 3 of a larger wave 5, right? Now, just for some upward targets, if in fact we do have a low in place, which there's certainly some early evidence that we do, we'll just do some Fibonacci relationships. So from the wave 1 peak to the current wave 2 low, and we'll just project the equality relationship and the 1618 for some potential third wave objectives. And let me just drag this down here. So the equality relationship, which would be kind of a minimum expectation for a third wave, would be 97.49, and the 1618 would be 105.43. So that would certainly be a nice move to get the 1618, but even the equality relationship is pretty good. And then, of course, you need a fourth wave pullback. Once that was complete, another fifth wave advance, and then potentially a very major top in that larger fifth wave. But that's fairly far into the future at this point. So the real actionable information here is that potentially a major low in place. You can see we got nice and oversold there on daily RSI. Now coming off that condition, and you can see the December low also marked a similarly oversold level of RSI. It was actually more oversold even, but that was an extreme market event. So yeah, basically an entry anywhere here, and you could put your stop below the December low at 80.61, but at this point there's been enough of a move up that it's probably reasonable to put your stop here at this low, which is a lot tighter, so just below 84.65, this proposed wave CF2 termination point. Okay, and yeah, just I thought I'd bring this up because not only is it a nice setup, but this is just basically what I was looking for so long to happen on the overall market. It didn't, or at least it hasn't happened yet. We haven't had any kind of major pullback or retracement yet, but this very large sector, healthcare is still a fairly large sector of the market, and this XLV is a very broad sector ETF of that. This sector has its own pattern going on, and it looks extremely attractive. Very clear Elliott waves, in my opinion, and a nice setup. So with that, we'll go to the Thinkorswim candlestick chart. I just want to point out nothing significant here. So, I mean, technically we are still looking fairly bullish despite this thrust down out of the triangle. And, we're we're still in that golden cross scenario where the 50-day moving average is above the 200-day, despite price at least temporarily stabbing down here. You can see nice volume coming in, much higher than it has been for some time. In fact, even higher than levels we saw going into that December low. So nice to see big volume coming in. That shows a lot of positions changing hands. So a lot of panic selling met with intelligent buying, in my opinion. And we got nice and oversold on this daily oscillator. Just starting to come off that oversold condition, so that looks good. And going in a little closer here, you can see we actually had a nice bullish hammer candlestick to mark the low, and then a doji, and now we've had a nice strong candlestick today, certainly reinforcing that we could potentially have a major pivot in place. So I was going to wait a little bit of time before entering, say some call options on this, but let's see here. So I did put some stock on XLV stock, and just 800 shares, and price. I bought them for a price of 85.72. So 85.72 is a pretty good entry, and I did that yesterday, so it was fairly close to yesterday's low, within 20 or so cents of it. And now, so far, the position's been working quite well. So I'll likely move that stop up to at least above break even, just so it doesn't turn into a loser. But at the very least, the stop should go below this level at this point. And that's currently 84.65. So just below that, 84.64 would be aggressive, yet reasonable stop at this point for a long stock. As far as getting into some calls, I'd like to see this actually get above the daily T line, close above it, show a little bit more strength, and then maybe once the direction is more solidified, open some call options on this. And I must say the call options on XLV are very cheap compared to how it can move. So these are the June option chain. So roughly 2 months to expiration here. And let's see, 87s. So roughly at the money. I mean, they're only $2 and change for 2 months. And just today, this thing moved $1.36. And if it continues trending like that, I mean, you could make a very high percentage return on some 2 month at the monies. As an example, or you could go out of the money and get a little more aggressive. But compared to how this thing can move when it's trending, the options tend to be very, very cheaply priced, in my opinion. So hopefully that's helpful. You can do something with that. Just thought I'd present it, as it looks like quite an attractive setup to me. All right, Serial Trader signing off.